What's happening with Tesla stocks? Let's analyze the volatility. We'll also touch on volatility smiles, all the strikes, and implied volatility. Let's take a look at the option chain, discuss the news, and examine the charts. I'll definitely show my portfolio where I manage Tesla stocks and use complex strategies to outpace this company. And of course, we'll sum up the results for the week, how much I managed to earn on Tesla stocks. Starting from the very beginning, over the past few weeks, Tesla has dropped significantly. A 20% drop is very serious. As I mentioned in the previous video, we had support at the $170 level. And if we break it, we'll go even lower. And that's exactly what happened. By the way, the option prices were indicating this, specifically the open interest. We'll come back to this later. Technically, you can see here that the stock broke that support, then retested it and bounced off that level. Then it headed downwards from here. This is quite a beautiful, good pattern. Let's see what could happen next. As we can see, we also have very serious supports at the $150 level. We'll come back to the $100 level later. Let's immediately look at the volatility. What's happening? Volatility is rising. If we look over the past few months, this is a very serious increase in volatility. We last saw this kind of volatility last year. Currently, the volatility is at around 54 on the near-term options, and it decreases to 50 on the longer-term options. What could this indicate? Obviously, volatility is rising. It's related to the drop in this stock. Let's also look at the volatility smile. It's a very important thing. As we can see, as usual, the near-term options have a typical volatility smile, both on the call side and the put side. But what's next? We see that the volatility is shifted more towards the downside on the put side. This means that the lower the stock goes, the higher the volatility at these options. There's almost no bend towards the calls. The volatility on the call side doesn't increase much, which indicates that traders aren't factoring in an increase in volatility. Let's also look at the implied volatility and historical volatility straight away. As we can see, implied volatility at the moment is much higher than historical volatility. This is a very good sign for us as traders to formulate sound strategies, because when implied volatility reverts to its historical levels, we can play on the decrease in volatility. This is a very interesting strategy through options. Let's also immediately look at the open interest. If we pay attention to the options chain, we have a very large volume of options at the levels of $175, $200, $300, $400, $400, and we have a very large open interest towards puts, particularly at $200, $170, $150. Quite a lot of these options are expiring next week. I want to draw your attention to the $150 level. These are put options. By the way, we can see that absolutely all call options are much higher than the current prices of Tesla stock. And in principle, even put options are much higher than the current prices. This can only indicate one thing, that the downward movement may continue, because all this hedge which the market maker accumulated to hedge the rise of Tesla from the sold options. Let me remind you, when you buy call options, the market maker sells them to you, and he hedges this by buying the underlying asset, which is Tesla stock. He uses a delta neutral strategy. It's a dynamic strategy, but if all these calls expire worthless, meaning they are out of the money, then he doesn't need such a large hedge. And purely in theory, if some news about Tesla stock were to happen right now, if it started to unexpectedly rise, then there would be a very, very large potential up to $300, because all this accumulated volume would need to be hedged by the market maker. And here a very serious gamma squeeze could occur. But if such a trigger does not occur, then naturally, there won't be any gamma squeeze, and there will be a full-on price decline. Let's take a look at my portfolio right away. Just a reminder, I manage a portfolio, and my task is to enter Tesla stock. I also have a detailed spreadsheet, which I'll attach in the description, so you can check it out at any time. I use a complex strategy, which involves options, a combination of options plus buying Tesla stock. Let's look at the chart. The blue line represents my strategy, and the red line represents Tesla stock from the previous time. Now, I'll add a new table, and we'll see what has changed and how much I've been able to earn. Let's break down how I manage the positions. Firstly, as you can see, I had an open put option with a strike of $165. Currently, the stock is at $163, so theoretically, Tesla should have entered the money, but I rolled over this option. I rolled it over to the $157 level, and additionally, I received $47, including a $2 commission, so I gained $45. So I continue to earn from this. Additionally, I opened a bull put spread with strikes at $155 and a bought strike at $145. This is a protective strike to not use up all the margin. I also received $110 for this. As we can see, I systematically sell strategies, sell options. At the moment, with the combinations and strategies, I've already earned $257. I have one share of Tesla bought, and it's in my portfolio. It's slightly negative because I bought it for $180. Next week, I will definitely be buying additional Tesla shares. I do this solely for profit from options. This is how trading works. Today is March 17, 2024. Let's summarize the past week. Tesla is priced at $163.50. We'll record this in the table as $163.50. I remind you that I started with Tesla stock. My task is actually to outperform Tesla stock at the moment. As we can see, my portfolio has grown by 1%, while Tesla stock has dropped by 18%. So I'm outperforming Tesla stock by almost 20%. Yes, of course, it's not entirely my merit because Tesla stock has dropped at this moment, but actually this is smart position management. Knowing when to exit a position and when to enter one is crucial. I currently don't have a position, and I will be building it up so that in the future, if the stock continues to rise, I can profit from it too. For now, I'm just using options for earnings. Let's get back to Tesla stock. Again, I remind you of my philosophy. I have no idea where Tesla stock will go. I simply don't know. And anyone who claims they do is lying. Nobody knows where the stock might go. But based on volatility, based on options, it can be assumed that it might drop further to $150. And again, there might be some consolidation, possibly a small rebound, but wherever it goes, I'll be earning anyway. That's called smart position management, my friends. That's the most important thing, my main message on this channel. You need to change your perspective. Forget about price movements. Forget about where the stock might go. You need to structure your portfolio in a way that no matter where the stock goes, you'll be earning. That's the key to success. We have fundamental analysis theorists, technical analysis theorists, but I lean towards something completely different: smart position and portfolio management. That's the secret to success. That's my philosophy developed over years. I tried trading based on fundamentals and technicals, but I only came to one thing: smart position management. If you have any questions, be sure to email me. I'll help you create a smart portfolio. I also advise you to watch this video where I discuss the top 5 stocks with great profit potential. Be sure to check out that video.